portion, and we'll move on. Now, nobody can outdo what we just saw this evening. However, when it comes to our fiscal 2017 audit presentation, you are a very close second.
Thank you.
They'll be doing it in German this evening.
It just keeps getting better.
I was going to say my consecutive streak of clearing out a room is pretty much still intact.
Unmatched.
Yeah. All right, so it's that time of year again. It's hard to believe it's been a year since we went over the 2016 audit. So the 2017 audit. First thing to mention is the district has once again in the last year been recognized by the Association of School Business Officials International and the Government Finance Officers Association for excellence in reporting. And once this report is filed with the state, we will be submitting it again. So hopefully our run of success here will continue and we'll receive additional awards.
Mr. Crotchfeld, the 2017 period runs from when to when?
July 1st to June 30th.
Of July 1st of?
2016 to June 30th, 2017.
Thank you.
All right. So to start, there's 4 different governmental funds. You have the general fund, special revenue fund, capital projects, and debt service. The general fund is the day-to-day operations, salary, benefits, utilities, supplies, purchase services, utilities, the maintenance services that take place, tuition. All right, last year, the 2017 year, we had expenditures of $159 million. And we ended the year with a fund balance of $22.2 million. Of that 22.2, 6.5 made up of capital reserve. That's where the district can put money in a reserve for capital projects, HVAC items, security, things of those nature. We had $3.5 million in reserve for encumbrances. Those reserves were open at the end of the year. Those are orders that we placed, but we did not receive the goods or services. So we have to have sufficient money reserved so we can pay for those bills when we do receive those services or goods. Oh, I'm sorry, too fast. 3.4 in the 2% legally required reserve. Years ago, we used to be allowed to have 6% and then 4%. The state has reduced that percentage as somewhat of a funding mechanism to offset their inability to fund their state aid. So we've met that criteria. And then we had money set aside to offset for tax relief. And please feel free if you have any questions to chime in. Special revenue fund. This fund, we account for grants from the federal, state, local areas. Money, anything that we receive in this fund, there's strings attached. It's a purpose. If we receive money from the EBF to buy pencils, we can't go and buy pens. All right, we have to buy pencils. Same thing if, IDEA is a big one. That's for special ed students. We have to use that money for that purpose. So the major awards in 2017, we had IDEA of $1.9 million. That's a slight decrease of $80,000 from 2016. NCLB, No Child Left Behind, $911,000, a slight increase. EBF, $105,000 they gave the district was, just an amazing amount of money that they continue to give us each and every year. PTA and other local, $42,000. Other local is, parents will sign up at Target to, when they use their charge card to give back to the schools. That money's accounted there. And then the Adult Basic Ed Grant, which is the civics program up at the high school, $180,000. So in that fund, we had expenditures totaling $9.2 million. Of that, EBF was $108,000. Now, you might ask, how can we spend more than what we received? Grants do carry over from year to year. If we don't use all the money in the first year, it carries over to the second year. There's more flexibility with the EBF, PTA, and other local grants. The federal and state grants, usually have a time period. If we don't use it, we have to return it. And we do a great job in this district of using the money that we receive and not giving it back. So PTA and other, spent $49,000. Federal, just over $3 million. State, almost $300,000. And then other is $4.8 million. The other is made up of capital leases. So it's an accounting functionality. Why would a capital lease go into a special revenue fund? It's not a grant. But when we go out for those leases, we go out with a specific purpose. And it's not a normal funding activity, so we have to account for it in that fund.
Excuse me, Joe.
Yes.
Does the PTA also have to follow those guidelines of only purchasing things that they have requested the board to approve? And that if they don't get that approval, then what happens to the money that they've raised?
So the funds that I'm talking about are the gifts that you guys approve, that we receive, we establish accounts, and we do purchase what's specified. If there is money left over, there are times when we go back and say, you know what, we have a couple dollars left in this grant award that you gave us, this gift, can we do this? You know, can we repurpose it? And if they approve it, you know, then we can reuse it. Right? But when it's very little money left over, so we might combine at one school 3 or 4 different PTA grants that have, you know, a couple bucks left over to
So it's not
repurpose.
quite as stringent as grants that you would get from the federal
Correct.
government and
There's
state
definitely
and
more
so forth.
flexibility.
Okay.
The next fund is the Capital Projects Fund. That's where we account for and report things for construction, other capital assets. We had total expenditures of just over $1 million, and that was comprised of security projects in the HVAC electrical upgrades at Chittick and Irwin as they finish up. It's important to note that this fund, the expenditures will fluctuate from year to year, depends what the funding source was for the projects and what's going on. So when we get ROD grants from the state, we have to account for those projects in the Capital Projects Fund, and as you're aware, we haven't received any ROD grants in several years, so the funding is running out. Right? The last governmental fund is debt service, often referred to as our mortgage account. That's where we account for the payment of bonds and interest. So as of June 30th, 2017, we had $75.7 million in bonds payable, and that was comprised of $57 million from the 2005 issue, which was, we also did a reissuance to save the taxpayers' money on the interest. That bond issue was for Hammersholt, Lawrence Brook, and Central. The 2007 refunding issue, that was the Churchill bond that was originally issued over 10 years ago, that a long time. You know what, that 15 years ago, excuse me, because the refunding was done in 2007. And then the $12.8 million was the Memorial School. Capital lease payable, $13 million in capital lease payables. It's important to note, some of the capital leases are accounted for in the debt service fund, depending on the length of repayment time. Others are accounted for in the general fund. It's just another compliance aspect that makes things a little bit complicated. So in the debt service fund, we have a debt limit. By statute, we can only borrow money bonds worth 4% of the average equalized value, and that is a 3-year average. The last 3 years, we take an average, 4%. The current debt limit is $291 million.
Value of what, Mr. Crutchfield?
The assessed value within the town,
Of all,
property values?
all property?
Yes. So the district's net debt is $75.7 million, which represents 26% of the debt limit. That
We're
means-
far shy of that amount.
Yes. So in turn, that means we could borrow another $215 million if needed with voter approval, which represents about almost 74%. You know, we are in really good financial shape when it comes to our debt.
trying to visualize a high school that's worth $215 million.
They say the one in New Brunswick is spent about that much money.
215
About that,
million?
Yeah, it was
Wow.
around 200 million. I
Wow.
don't remember
Wow. Well,
exactly.
thanks for keeping us lean.
And also, I think in Perth Amboy, I think they built a high school.
The important thing to note with both those are that they're the former Abbott districts, and they don't have control over the construction. It's state managed, so not to badmouth the state, but when they're involved, prices seem to go up. All right, so enterprise funds. An enterprise fund is a fund that has a profit motive. We account for the child nutrition, community programs, and JM PAC in this fund. So child nutrition, we had a total operating revenues of just over $2 million and non-operating revenues of just over $900,000. Operating revenues account for lunch, breakfast sales, a la carte catering. The non-operating accounts for it's really a grant program through USDA and the state for free and reduced meals. We also get a very small price per paid meal. So also commodities that we receive through the state, that's accounted in that $900,000. We had operating expenses of $2.9 million and a change in that position of $67,000 to the positive. It is important to note that the prior year we had a better year. We had about $158,000 positive change in that position. So
What does that mean, a change in net position?
it used to be referred to as profit, income. So P&L, profit and loss. So the accounting.
We just want to use bigger words,
verbiage,
right?
yeah, so you need to hire accountants to understand the financials. It's like the lawyers, I guess. Sorry, Matt.
It's okay. Nobody likes lawyers.
And sorry.
All right, so total meals served, 545,000 lunches served, 63,000 breakfast meals served last year.
Or another way to put it would be a change in eating position.
There we go.
So we increased our lunch sales or meals combined by over 50,000 meals. And it's very early in the current year, but I think it's safe to assume we're going to serve over 650,000 meals this year, which is just, that's a lot of food. It's amazing how many meals we serve in this district. So another enterprise fund is community programs. Total revenues of $2.9 million. It's made up of early morning program at $680,000 of revenue, after school encore 1.4, almost 1.5 million. Early Learning Academy, which is the preschool program, of $677,000, and other of $126,000. All those revenues are up except for other. There was a slight decrease. Other accounts for the enrichment programs that we run in the district. It used to have some adult school classes that we've really pared down. It does serve a good, it's a good benefit to the community. We had total expenses of $2.6 million. So we had income before transfers of $323,000. And then we took money out of that fund and transferred it over to the general fund of $359,000. We took more money. This is the first time ever we took more money out of that fund than what we actually earned in the year, but they do have a healthy retained earnings. All right. So this slide is new this year, the Joanne Magistro Performing Arts Center. The board took action to separate that operation out of community programs. So we had total revenues of $600,000, expenses of $234,000, income before transfers of $367,000. It's important to note that our revenue went up in this fund and our expenses went down, which you don't see very often. They had an excellent year. Denise Budvite was here last meeting. You met her. She's been doing an excellent job renting the facility out. So we made $367,000. We took out over $400,000. So again, they have a healthy retained earnings, and those two enterprise funds, we're allowed to transfer money out. It's part of the budget that's approved to help offset the expenses in the general fund.
And just to reiterate, we did promise the district when we built Hammersholt that we would be doing that with the Performing Arts Center, that we would
Absolutely.
generate revenue, and we're getting close to $500,000 a year now.
Yeah, and I expect the revenue number to increase again this year. All right, so finance, I made a typo. It should say fun finance facts. All right, so total cash outflows, inflows, over 276 million. We had outflows of 276 million, and ending cash on hand as of June 30th of over $30 million. So again, we're in a good financial position on the budgetary side and also on the cash side. There are many school districts that have to take a loan from the state because they, don't fund the payments in a timely manner. We're fortunate where we do not have to do that. Other financial facts, 25 bank accounts, compliance with all the tax filings, W-2s, journal entries, registrations for clubs and athletics, bands, activities, process over 1,100 before and after school registrations, after school registrations, all the purchase orders, invoices, checks, paychecks issued. The really good thing is in the last several months, we've mandated direct deposit for all employees, and we no longer issue pay stubs. It's all online through an employee portal. That's been very successful. Timesheets, attendance slips, the bids, renewal of bids, requests for proposals, quotes, student service providers, all that stuff is turned, put into a package and turned over to the auditor. The one thing, this is a new slide, and I think it's very important to point out, the district has achieved excellence in financial reporting. All right, but it takes everybody. It takes a village to raise a child. It takes everybody in East Brunswick School District to have a successful audit and achieve excellence in financial reporting. It starts with all the staff, instructional support staff, administrators, everybody involved in the enterprise funds, facilities management and transportation, student activities and athletic funds, special education, student services and curriculum, human resources and information technology, the financial services department, which is made up of accounting, purchasing, accounts payable, and payroll, the superintendent, and the Board of Education. Everybody plays a role in order to have a successful audit. So, I think sometimes we forget that, and when we stand up here, you guys say thanks, great job to me and Tara, but it's more than that. Everybody has a role, and I think it's important to recognize that. So that's the presentation. Before I turn it over to
Well, before you do
the auditor.
that, might you introduce some members of your colleagues here from the finance office?
Sure.
That would be great.
So you have Tara Rosenving. She's the Senior Manager of Accounting. And, I can't say enough positive things about her. She, I think when I came to the district 15 years ago, I would hope that, people have the opinion. I took it to a new step, and then when she came on board, she raised it to another level. So Kathy Rowe is in child nutrition, major part of turning that department around. You have Mike and Dan from Aramark, who are running the Aramark side of child nutrition, and that's all we got from finance.
Excellent.
But there's a lot of other important people in the audience that make this successful.
Well, you guys continue to get recognition, and I'm sure we're about to hear our unqualified opinions, and just do an incredible job managing, as you can see, many pieces from where this comes. So good work. Thanks. Thanks, everybody.
Thanks, Jeff.
Thank you.
And next, we want to introduce who we have here to round off our discussion.
So our independent auditors is Wiss and Company. Scott Clellan is the partner in
Scott?
charge, and he's going to be doing the presentation.
Thanks, Joe. Good evening, everyone.
Hi.
It is a pleasure to be here tonight to discuss the results of the 2017 audit. And again, just like Joe said, if you have any questions during the presentation, feel free to ask any questions. What I have to say is that I have not worked with any district in my 30-some-odd year career where the administration actually gives 75% of the presentation. And I think that's a reflection on the seriousness that they take the financial situation here. And working with Joe and with Tara, they are excellent. You probably have one of the strongest, if not the strongest, in the state of New Jersey in terms of the people that are running the everyday operations in your district. It's a pleasure to work on this engagement. This is my first year on this engagement, and it's probably, I was talking to Darren earlier, it's probably the cleanest engagement we have out of all the districts that I've worked with in the state of New Jersey. So I just want to first say that what I'm going to be going over is very different than I normally go over it, because I'm usually doing what Joe's doing. So Joe did a great job, and again, I just want to commend the district for having such a strong staff, and they really take the everyday responsibility seriously, and they want to do everything, they want to be perfect. And as we know, not everybody's perfect, but they want to be perfect, and they challenge us to find something. So that's always a pleasure as well. This year, the team was almost completely different. I was a new partner on the account. My partner, Dave, left the firm and went to another firm. Darren did serve as manager last year, but we had a brand new senior and we had brand new staff. So you have almost a brand new team taking a fresh look at everything this year. So that's kind of a unique aspect of it as well. I know there were concerns about transition, but I think overall it went very, very well. And the audit got done timely. And again, we completed everything as we was expected to. I did already recognize the staff. We're not here a week. We're here 4 or 5 weeks working on the audit. It's a very, as Joe showed you, it's a very large district. It's got a lot of things going on that they're required to manage, and then we then take what they provide us and we verify, confirm, and make sure those numbers are materially accurate, and they do a great job on that. We look at various aspects during the course of the audit. We look at regular administration, instruction comes into play as well, transportation operations. We don't look at the operational side, we look at the financial side of things. So all these items are included in that, in the audit procedures as well. Quickly, there's really 3 layers to the audit. There's generally accepted standards we have to follow. Then the government adds another layer of government auditing standards that we have to follow as part of the audit procedures. And then lastly, we have to also look at your grants. Every year we have to spend some time looking at your federal and state programs in accordance with the uniform guidance. And this is an area that the state and federal government have reviewed as a risk area. So we spent a lot of time in these areas looking at IDEA, Title I, et cetera. And I'm happy to report that we did not identify any weaknesses or compliance exceptions during the testing of the grants. This year, I believe we looked at the IDA program on the federal level, and then we also looked at some of them on the state level, and then they have to be rotated on every 3rd year. The large report that I believe you received at this point has 4 different layers to it. The introductory section is really your transmittal letter. You kind of outline some of the general information about the district. The financial section, which is really where we spend most of our time, looking at the financial numbers, that's where our opinion appears as well. Then in the back of the report, there's 20 pages or so of statistical data, which is not audited, but it's useful information about tax rate, debt service, et cetera. And then the last section would be the single audit section, which displays the results of all your grants, and also we provide an opinion on the compliance with the grants, as well as test internal controls over compliance. The results of the audit, it was an unmodified opinion. That's a clean opinion, meaning that the information that was provided by the district was verifiable, auditable, et cetera. I want to commend the district for the 2 awards that Joe mentioned. The ASBO Certificate of Excellence, I believe, was 4 consecutive years now, and the GFOA Certificate of Achievements is 2 consecutive years. There are only about 30 districts in the state of New Jersey that get the ASBO award as of today, and there are a lot less. There's only about 5 or a handful that get the GFOA, and very few districts. I think there's 3 in the state that get both in a given year. So that's something to be very, very proud of, and I hope you continue to apply for it on a go-forward basis. As Joe went through the process as well of his presentation, very, very strong financial position. Very, very strong reserves, which are very good to have set aside. All those reserves are within the statutory limits that are imposed by the state of New Jersey. Third year of GASB 68, again, it's not your liability that you have to pay right now. However, we're required to record that liability, and your share of the net pension liability relating to PERS or Public Employee Retirement System is a little bit over $58 million. And the Teachers Pension Annuity Fund, your share of that net pension liability, which the state is paying on your behalf currently, is $475 million. Big numbers. Again, you pay as you go for PERS, state still pays for TPAF. I mentioned the 3 reports that we issue. Again, we issue an unmodified opinion on the financial statements. We issue a report on government auditing standards where we have to identify if there's any material weaknesses or significant deficiencies. And I'm happy to report there were not any. We do give an opinion on your grant compliance for federal and state grants, and that's an unmodified opinion also. And then we also issue a smaller report, which is a auditor's management report, which in this year there was one finding related to student activity funds, which was fairly minor in nature that you'll be taking corrective action on. I don't know if it's on tonight's agenda or not, but you'll have to take corrective action to address that situation. But again, it wasn't anything that was that significant. And that concludes my overview of the audit process and what we actually render opinions on during the course of the audit.
Thank you. Anyone with questions? Once again, it's the same story. Thank you very much.
I
Yes,
just want to make
Mrs.
a
Shaw.
comment as opposed to a question, but you mentioned that we're one of the cleanest districts you have.
Yes.
And, you know, it's what we appreciate from our finance team, but I also have to say that, you know, we've really come to expect it, and they just don't disappoint, you know? I mean, when you take a look at the awards that you outlined and how some of them have been 4 years in a row, some are 2 years in a row, and we've been sitting here at this dais for a pretty long time, and we've only heard, you know, maybe a couple of recommendations over the years. So we are so grateful for this team that continues to make all of us look good.
Yeah, and I actually look forward to the recommendations, because if we didn't have them, I begin to worry. I begin to wonder.
Sure.
And so, you know, and it's something new this year again, too, but I appreciate it. Tara, we hardly get to visit with you, but you do come this time of year, and we'll tell you again how much we appreciate your work. Mr. Crotchfeld, you come a little more often, but we tell you that all the time. Ms. Juliana, I'm sure you had a little something to do with the financial results, so congratulations and thank you for your oversight, too.
It takes the team. I mean, this is absolutely a team effort, and, you know, we work very closely together. Nothing happens without us communicating with each other and making decisions together. And I personally, and I've said this in the past, but it always warrants saying again, we can't do our job well if we don't have the support of the superintendent and the board. And you allow us to do our job well. So I can't tell you quite enough how much we appreciate that. So thank you for that.
Thank you.
And I appreciate it too, because the number one issue most superintendents get into and which terminates their career is some issue with finance. And I go to bed well at night thinking about, in terms of the finance issues, they are well taken care of. We're always in compliance. And I appreciate the fact that we are in such good financial shape.
Excellent. Thank you.
Thank you.
All right.
Nice.